All right. Hey, Sil, how you doing?
Hello there, Mr. Spencer. Doing good, doing good.
All right. Well, we got an audience filled. We got a webinar filled with folks ready to learn about the mortgage payoff program. So we wanted to, we told them a real quick 10, 12, 15 minutes. So we want to rush through it. Guys, please send over any questions, put it in the chat. We will definitely get to it, but we want to be courteous of everyone's time. So we're going to go through it because you just get too many clients asking the same things over and over. So we just want to, have a webinar so you can educate yourself what it is, what it is not, let you know what to come to your appointment with so that you'll be prepared to find out your mortgage payoff date. So again, you're going to see this and you're going to see mortgage payoff program, and you're also going to see debt-free life. One and the same. Some people have debt, some people don't have a mortgage. We can do it all. So I'm just so going to be interchanging those terms, but it's the same exact thing. Okay, so let's get through here. There you go, Sil.
Well, what if I could show you how to get out of debt and build wealth without spending any additional money? Wow. What would your life be like if you were able to accomplish this?
Wow. Amazing, right? And if your mortgage and other debts were paid off, would your retirement be more comfortable? And most of our clients tell us strict point blank, it would be much more comfortable if that mortgage was no longer in their budget pad. So let's just go over real quick what this is not. Okay, let's just knock out what this is not. So if you can save you, the rest of the webinar. This is not debt consolidation at all. Okay, this is not a get rich quick scheme at all. This is not any multi-level marketing or software sales, and this is not a sales pitch. Okay, so just wanted to share that. This is not any financial firms trying to, none of that at all. Okay, so we're going to be able to teach you how to reduce the interest you're paying to lenders, erase your debt in 9 years or less, decrease the amount you're paying out in taxes by improving your cash flow and allowing you to start saving money. But bigger than anything, absolutely bigger than anything, is retired with tax favored income. Okay. What we're sharing has not been new. We didn't invent it. It's actually been around. A lot of us just did not have access to it. Okay. So Walt Disney used a debt-free life program, Ray Kroc, Doris Christopher, J.C. Penney. It's been around for ages. You just either had to have millions of dollars to qualify, have access to the individuals like us, or you just had to be in that circle. And we have bust open that circle, and now you have access now. Now we just need to see if you qualify. So again, number one, knowledge only becomes power when you apply it. All right. So Sil, have you ever played this wonderful game called Life here?
Yes, sir. Absolutely.
Well, game of life. First thing that they say, in order to get into the credit bureau and in order to have a credit score, you typically need
debt.
You need debt every step of the way. So we start from credit card debt. But most of you guys probably familiar with starting with a credit card, then starting with that auto loan, then starting with college credit or college debt, student loans. Then you no way possible that you can leave school and not increase and have a bigger vehicle. So we get a bigger car, more debt. And then a lot of us are here because we have that mortgage, and we definitely need a place to live, a place to grow, to have that American dream, and that equals more debt. And then there's no way possible that we can work and not take, time off for a vacation. But we didn't quite save all year long. So we charge our vacation on top of that and accumulate more debt. And then we cycle and repeat, not really getting into good debt or bad debt, but every step of the way, we pick up more debt. And before you know it, it's the end. It's time to retire. And guess what? The reality is some people cannot retire because they accumulated too much debt. So we're going to show you how we're going to eliminate that debt, not negotiate the debt, eliminate the debt. The average American household has around $250,000 in debt. Due to this program, I'll be honest, we've been seeing 1.1, $1.2 million in debt very frequently. How about you, Sylvia?
Oh, yeah. Between student loans, just unbelievable the amount of debt.
Yeah, and if they're lucky with that, they're able to save about 3%. They're able to live off about 23%, but the bulk of that debt is going out to taxes and interest, right? But with the debt-free life program, we reduce the amount that you're paying out in taxes, we reduce the amount you're paying out in interest, but we allowing you to live more. Okay, we're not one of those programs that's telling you to eat rice and beans, sleep in an RV, don't go out, don't live your life,
Yep.
and your debt be taken care of in 4 or 5 years. It's not sustainable, it's not logical, and it really doesn't work for the average person. But this allows you to spend more, save more, but the part that is coming from is the taxes and interest that we really don't see the benefit for on a day-to-day basis.
And it's money that you'll never be able to get back.
Nothing you can do to get it back. Everyone knows this guy, Albert Einstein. His famous quote, compound interest is the eighth wonder of the world. He or she who understands it, earns it. He or she who doesn't, pays it. Okay. So, Sylvia, I know you know the answer, but for those out there at the webinar, please right now type in, would you rather have $1 million today, or would you rather have a penny doubled every day for 30 days? We're going to give you 10 seconds to type in, would you have $1 million today, or would you have a penny doubled every day for 30 days?
Ooh, do I get to type?
Nope, nope, nope. Let's leave it for
Oh,
them. All right.
no.
3, 2, 1, boom. Well, for you, those of you who chose a penny doubled every day, let's see what it looks like. Boom. Day one, 2 cents turned into 4 cents, all the way down to $10. So you millionaires out there that got that 1 million, you are probably very happy right now. Day 11 to day 20, from $20 down to 10,000, you're still very happy. But this is what compound interest in this example does, where by day 27, you have exceeded that $1 million, okay? And day 30, you have up to 10 million. Now, no, we're not saying that this program is going to take you from 2 pennies all the way to 10 million in 30 days, but this is an example of the power of compound interest. Money going inside itself over and over, working for you, way different than simple interest, okay? So debt, we all know that if we minimize the amount of debt, we can create additional wealth. Most people don't have a problem with saving. They have a problem that they don't have enough to save. So guess who's one of those people? I'm one of those people. And I like to share
Me
with you guys,
too.
right? I like to share with you guys my debt-free life story as well. My wife and I, this is a true debt pad. Everything on here from Indico to Olo, the Kirby man even came and gave us a piece of debt, from timeshare, student loans, all the way to our mortgage, all the way down to having an average interest rate of 20%, close to 21%. Okay, it's totally normal. But what we were able to do was look at it, right? You only know your numbers when you look at it. And that's the hardest part. A lot of you guys are waiting to meet with Sylvia, myself, or other mortgage payoff professionals right now. And it's tough to be able to look at your numbers. So I was one of those same folks, tough to look at our numbers. So right now, what the numbers showed me was that my total debt was $263,000. That's the amount that if I was to write a check, that would be my payoff amount. But I wasn't writing a check. I was making monthly payments, so that therefore my actual real debt, the amount that's coming out of the bank account, the amount that why I can't pay an extra $20 or $50 on that credit card, the reason that that was going nowhere was because it wasn't minimizing from 263,000. It was going down based off of 422,000, and $50 doesn't get too far when you're going against that big 422,000 ball. But by focusing on the debt-free life plan, redirecting inefficient funds, which we show you how to do at no charge, we show you for free. What does that look like? By paying off, following the system, following the plan, it reduced it from 25.8 years down to 8.5 years. It's using the same money that I was already putting into the wrong places. Okay. What didn't make me lose my lifestyle or anything at all, but reduced it from 25.8 years down to 8.5 years. And this is what Sylvia, myself, our team is going to show you how to do as well. And then saving close to $70,000 in interest. So when we get together and we have your numbers and we sitting there, we're going to be able to show you the exact date, month that your payments are going to be paid in full. We're going to show you to the T because it's guaranteed. We're not going to guess. We're not going to wonder. We're going to actually tell you guaranteed what it looks like, which month you're going to be able to pay that credit card off if you have it, that mortgage off that I know you have because that's why you're here. We're going to show you the exact date that you're going to do that. And if you continue with the plan all the way through to retirement, it shows we're able to show you what your retirement looks like. Okay, we'll be able to show you by how you, if you continue to use this plan, you have a tax-free retirement. We don't speak a lot about that because most people just can't even think about retirement at this point because the mortgage is what's on their mind. But if we definitely spend a lot of time showing you how this same plan can be used from today all the way through to retirement so that you can retire mortgage-free and tax-free. Okay, so benefits of the program: achieve peace of mind, get out of debt in less than 9 years, learn how to prioritize your accounts, increase to your savings, maximize cash flow, but bigger than anything, retire with that tax favored income. And that's what we're able to do for you. So how does it work? Rush through it real quick. We're going to show you how the wealthy leverage their resources. Okay. Now, not saying any way, shape, or form, this is just for an example. I started with just redirected funds from zero. No one needs any lump sum. No one needs a boatload. We show you how to do it with what you have today. Okay. So, but option A, someone was to walk in and say, hey, this is how we're typically wired to pay for things. I got 20,000 in cash. I want to buy a car. I'm going to buy a car. Okay. But option B, this is what we're sharing, a smarter way to do things, to work the way the banks work, okay? Be your bank. Option B, put $20,000 in a special 4% plan, okay? You put that money in a special 4% plan, and then you borrow that 20,000 from that special 4% plan to buy your car. One extra step, let's just see what that one extra step does that we show you how to do. Again, if you have questions, please continue to put them in the chat, put them in the box, and we'll definitely respond to you as well. Just don't want to slow up the process. But that $20,000 that we put in that $20,000 special plan, it's growing annually at 4% compound. So that 20,000 by just sitting it, I like to tell my clients, think of walking in the bank and saying, hey, I have $20,000 and I want you to put it in a back box and I want you to save it. I want you to put it, and every year I want you to let it grow 4% compound. But on the other side, you walk to the front teller and said, I want a loan for 20,000. That's a complete different type of transaction right there. That's simple interest. Okay. So while my money is in the back room, not bothering a soul, earning 4% compound, I'm down borrowed the 20,000 from the bank at 5% simple interest. And that my money grew to $4,333, but the simple interest cost me $2,645. So just by taking that one extra step, I have made myself and my family an additional $1,600 of just pure interest earnings. Okay. So what does that look like? Option A, in 5 years, guess what? I have the car. I have no 20,000, but I have the car. And this is what a lot of us have been doing for years. That's the only way we know. Okay. But option B, by me putting 20,000 in that special 4% plan and borrowing 20,000 from that plan at 5% for the car, after 5 years, I have the car, Remember, my 20,000 was in the back office collecting interest. And after repaying my $20,000 to that plan, I now have an additional $1,687. This is what we call the win-win, guys. And this is what we're trying to see if we qualify for, okay? So what's the best financial product for the debt-free life plan? Well, it's a few things it must have. It must have guaranteed growth. You must have access to it with no fees or penalties. You must be able to contribute to it flexibly. We know that life today is not always what it's going to be in the future. So it must be flexible and has to be able to maximize resources. So we look and see, I took a poll. What are our clients typically doing? What are they doing? They're typically putting money in a savings account. And guess what? That 0.0025 is not enough. They're trying to put money in a CD, but the moment you walk out and try to borrow that money back, they're going to hit you with fees and penalties. So that's not going to work. Well, guess what? The stock market is nothing guaranteed about it from day to day. And guess what, guys? We may want to feel that our investments are solid investments, but it's not guaranteed. So none of those vehicles are going to work, okay? But the debt-free life vehicle that works is not your traditional plan where you contribute more over the years and the cash value and everything goes down as you get older. Well, this is a specialized one, right? The mortgage payoff program, the debt-free life program allows you to contribute less as you get older, but earn and the cash value increases with the death benefit increases the older you get, okay? So it's not something that you're supposed to know about. It's not something that's right under your nose and you just, choosing. And some of us, you probably found us from social media, probably found us from word of mouth. So this is why we wanted to just spend some time real quick to kind of give you a real quick idea of what it is that we'll be talking about on that first call. So maximizing resources, and we show you how we're able to use every dollar twice. All right. So first thing foremost, the death benefit is used as a collateral. Okay. But in the plan, that cash value is your credit limit. So real quick, we look and we say, hey, I got $10,000 in my plan. Okay. Well, the $10,000 in the plan is just like that $20,000 that's in that back room locked up. Okay. It's always earning interest. Okay. And you could say, hey, I want $1,000 to redo my roof. I need to do plumbing or something in the home. I need to do something in the house. Well, you actually are taking money and taking a loan from the debt-free life company, and you need that. They're going to say, take it. Why? Because they see that your cash value is your credit limit. Okay, no questions asked, no credit checks, nothing like that. It's already your money. And the cool part is your 10,000 is always earning compound interest, even though you took a loan from the debt-free life company. Okay. And why is that important to understand? Because your $1 is working inside the plan and outside the plan. So inside the plan, you're still earning interest, you're saving for the future. Outside the plan, you've just been able to do your roof, pay off debt, finance the new purchase, pay off your mortgage. Okay. You're able to do, use that dollar twice. And it's better than a loan because it's already your money. Okay. And it's better than a savings account because you're earning interest on the entire principal, even when you're using that money. So you're not earning compound interest on 9,000 because you borrowed 1,000. You're earning compound interest on the entire $10,000. There's no other vehicle that's going to allow you to be able to earn interest on money, even though you're using it outside the plan. Decision. Now, so if I say all that, might be pumped up, out of breath. I want to be, courteous of everyone's time. But here's the next steps for you guys. When would you like to reduce your debt? Right? We're just here to give the information. We're here to educate you. But when would you like to reduce your debt? When would you like to improve your cash flow? Okay. When would you like to reduce the amount you're paying out to Uncle Sam? Do you have a plan to get there? We're offering to get you that plan at no charge. Okay. Just to show you what is your mortgage payoff date. But Sylv, here's the thing. We understand numbers. We understand people. Nobody cares about anything I said. It all boils down to their numbers, right? So what's your mortgage payoff date using the mortgage payoff program? That's what we're going to tell you. But we understand that only your numbers matter. So we need to be able to sit down with you to give you as accurate as can be, for you to give us the numbers as accurate as it can be. So this is what it looks like. By now, you should receive an email, a few emails and a text message about getting your financial analysis. Now, you don't have to fill this out before we meet. You can just have the information. Our clients that are serious, they definitely have it filled out before we meet because that saves us so much time. You put in your name, date of birth. There's no personal information, no account numbers or socials or nothing like that. We don't need any of it, but we really just need this to understand what is your concerns and how we can address them, and if you even qualify for the program, because not everyone qualifies still, but they definitely, a lot more people do. And here, this section, the real estate, where it says mortgage payment P&I only, that's principal and interest, guys. Principal and interest. That we'll never be able to pay off taxes, and depending on what type of loan you have, the escrow for the insurance could be, a different dollar amount each year. But principal and interest is all we need. What type of mortgage it is, if you have additional properties or what have you. Next page you'll see is the debt. Any debt, all debt, every debt is acceptable. Student loan debt, taxes, IRS, child support, whatever you're currently paying on that can have a zero balance, we want you to put that on there because it definitely helps with the plan. All right. So the more the merrier. If you need another sheet, just bring another sheet. The more debts, the merrier. We want to help you get out of debt. We want to help you pay off that mortgage. We want to help you, completely get living that debt-free life. So what's next? To see if this works for you, schedule your one-on-one mortgage payoff session. It'll be with myself, Miss Sylvia, and a whole other team of mortgage payoff professionals that were trained by Sylvia and myself. And if you're not sure how you ended up here, just go back to www.mortgagepayoff. I put professionals, but it's www.mortgagepayoffprogram.com. And we'll be more than happy. But if you made it this far, you're receiving text messages and you're receiving emails. Again, mortgagepayoffprogram.com. And we'd be more than happy to help. Again, please continue sending us the questions that you may have. We want to answer them for you. It's a lot of information. It's not necessarily designed for you to know everything today. And we thank you for your time and have a good one. Look forward to meeting you for your mortgage payoff session. Have a good one.